Do you want to make your money work for you, but don't have a lot to invest? No problem. In this video, we'll show you how you can start investing with just $1,000 and still achieve great returns. Hey everyone, welcome back to our channel Future with Finance, where we talk about personal finance, investing, and everything in between. Today's topic is very exciting because we're going to discuss where to invest your first $1,000. So, if you're a beginner in the world of investing and looking for some guidance, then you're at the right place. In this video, we'll go through 24 different investment options that are perfect for beginners. Let's dive in. Option 1. High Yield Savings Account. If you're risk averse and don't want to take any risk with your money, then a high yield savings account is the perfect option for you. These accounts are offered by many banks and credit unions and typically offer a higher interest rate than a traditional savings account. They're FDIC insured, which means your money is protected up to $250,000. The only downside is that the interest rate is not as high as other investment options. Option number 2. ROBO-ADVISORS. If you're a beginner and don't want to spend too much time researching and managing your investments, then ROBO-ADVISORS are the perfect option for you. These are automated investment platforms that use algorithms to create a diversified portfolio for you based on your risk tolerance and investment goals. They're low cost, user-friendly, and perfect for beginner investors. Option 3. Exchange Traded Funds, ETFs. ETFs are similar to mutual funds, but they're traded on an exchange like a stock. They're a great option for beginners because they're diversified, low cost, and offer exposure to a wide range of stocks or bonds. You can buy and sell ETFs, just like stocks, and they offer a great way to invest in the stock market without having to pick individual stocks. Option number 4. Individual stocks. If you're someone who enjoys researching companies and analyzing financial statements, then investing in individual stocks might be a great option for you. It's important to do your due diligence and research the company before investing, but if you pick the right stock, the returns can be very rewarding. However, investing in individual stocks can be risky and should only be done after you've gained some experience. Option 5. Real Estate Investment Trusts, REITs. REITs are companies that own or finance income-producing real estate properties. They're a great option for beginner investors who want to invest in real estate but don't want to deal with the hassle of owning physical properties. REITs offer high yields and diversification, and they're traded on major stock exchanges just like ETFs. Option 6. Bonds. Bonds are a type of fixed income investment that pays interest to the investors over a set period of time. They're considered less risky than stocks and offer a stable source of income for investors. Bonds can be purchased individually or through bond mutual funds or ETFs. They're a good option for beginners who want to earn a steady income from their investments. Before we proceed, I would just like to invite you to please like this video, subscribe if you haven't already. That will surely help the channel a lot. Option 7. Certificate of Deposit, CD. A CD is a type of savings account that pays a fixed interest rate for a specific period of time, ranging from a few months to several years. CDs are FDIC insured and offer a guaranteed return on investment. They're a good option for investors who are risk-averse and want a low-risk investment with a guaranteed return. Option 8. Peer-to-peer lending. Peer-to-peer, P2P, lending platforms connect borrowers with investors who are willing to lend money for a higher return that they would receive from a traditional savings account or CD. P2P lending can be a good option for investors who are looking for higher returns than what traditional investments offer, but it comes with some risk as there's a chance the borrower may default on the loan. Option 9. Index Funds. Index funds are a type of mutual fund or ETF that tracks a specific stock market index, such as the S&P 500. They're a good option for beginner investors who want to invest in the stock market but don't want to spend time researching individual stocks. Index funds offer diversification and are typically low cost. Option 10. Cryptocurrency. Cryptocurrency such as Bitcoin and Ethereum is a digital asset that operates independently of a central bank. While investing in cryptocurrency can be risky due to its volatility, it can also be rewarding for those who are willing to take the risk. It's important for investors to research and understand the technology and risks associated with cryptocurrency before investing. Option 11. Dividend-paying stocks. Dividend-paying stocks are stocks that pay a portion of their profits to shareholders in the form of dividends. These stocks can offer both income and potential capital appreciation. It's important to research the company's financial and dividend history before investing. Option 12. Annuities. An annuity is a contract between an investor and an insurance company that pays a guaranteed income stream over a set period of time. Annuities can offer a stable source of income and are a good option for those nearing retirement age. Option 13. Gold. Gold is a precious metal that has been used as a store of value for centuries. It can be purchased in the form of coins, bars, or ETFs. Gold is considered a safe haven asset that can protect against inflation and market volatility. Option 14. Foreign currencies. Foreign currency trading involves buying and selling currencies in the global foreign exchange market. It can offer potential high returns, but also come with high risk. It's important for investors to research and understand the currency market before investing. Option 15. Art. Art can be a valuable investment for those with an interest in the art market. It's important to research the artist, the artwork's history, and provenance before investing. Art can appreciate in value over time, but it's important to remember that it's illiquid and not easily sold. Option 16. Small business ownership. Owning a small business can be a rewarding investment for those with an entrepreneurial spirit. It can offer potential high returns, but also comes with high risk. It's important to have a solid business plan and understanding of the industry before investing. Option 17. Venture capital. Venture capital involves investing in early-stage startups with high potential for growth. It can offer high returns, but also comes with high risk. It's important for investors to have a strong understanding of the startup business model and leadership team before investing. Option 18. Mutual funds. Mutual funds are a type of investment that pulls money from multiple investors to invest in a diversified portfolio of stocks, bonds, and other securities. They're a good option for those who want a diversified portfolio without the hassle of buying and managing individual securities. Option 19. Preferred stock. Preferred stock is a type of stock that pays a fixed dividend and has priority over common stock in the event of bankruptcy or liquidation. They offer a stable source of income and can be a good option for those seeking higher yields than bonds. But they also come with risks such as interest rate risk and credit risk. Option 20. Treasury inflation protected securities. TIPS. TIPS are a type of bond that adjusts for inflation, ensuring that the investor's purchasing power remains constant. They offer a relatively safe investment option for those seeking to hedge against inflation, but they also come with risks such as interest rate risk and liquidity risk. Option 21. Farmland. Investing in farmland can provide a steady source of income through rental payments from farmers. Farmland can also appreciate in value over time, making it a potentially profitable investment option. However, investing in farmland requires significant capital and expertise. Option 22. Livestock. Investing in livestock such as cattle or sheep can provide a steady source of income through the sale of meat, wool, or other animal products. However, investing in livestock can be risky and requires significant expertise and resources. Option 23. Angel investing. Angel investing involves investing in startups or early-stage companies with high growth potential. This investment option can be highly lucrative if the startup is successful, but it comes with high risks as many startups fail. Option 24. Peer-to-peer real estate investing. Peer-to-peer real estate investing platforms like Fundraise or Roofstock allows investors to invest in real estate projects or properties with small amounts of capital. This investment option can provide a steady source of passive income through rental payments and appreciation in property value. However, it also comes with risks such as market volatility and lack of liquidity. There you have it. 24 investment options for beginner investors to consider. Remember, it's important to do your research and understand the risk associated with each investment option before investing. Investing is a long-term game, and it's important to have a diversified portfolio and a disciplined investment strategy. Thanks for watching, and we'll see you in the next video.